Bitcoin has been following the 4-year cycle to perfection. However, one major roadblock still stands in the way between now and the start of the next bull run. In today's video, we're going to be discussing what that is and how we can overcome it. Let's go ahead and jump in. Okay guys, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic weekend. In today's video, we're going to be doing a complete high time frame, macro, technical, and structural analysis, going over a variety of new and old indicators, discussing the strength of the macro price action, the probability of a macro continuation, whether or not the 4-year cycle will be respected, and even if we could potentially be expecting a large correction for Bitcoin in the coming weeks. Alongside this, we'll also be going over the short-term price action, discussing it from a technical and structural perspective, discussing the next probable moves, and of course, how the price action is developing right now. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the data, the technical and structural information, and the relevant economic events. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the third link down below. You will get access to charts, updates, videos, educational posts, news events, analysis, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in trading, you can join our VIP group with over 617 members. We post trading setups with exact entries. You can see the huge amounts of profits we'll be making over here. Exact entries, exact targets, exact stop losses, trade justification, and exclusive analysis. Not only will you get access to this VIP group over here, you'll also get access to our trading chart and education chat, our general chat, our trade setup chat, our help chat, our daily video chat, and our news chat. If you're interested in getting access to all of that, with over 600 members, go ahead and contact me in the pinned comment of the free channel for more information. You can also find our entire trading track record with over 31 months of data, guys, over here. Let's dive into the video, starting on that market data. How are we looking for today? 24-hour volume is down 7%. Moving into the weekend, it is expected we do see a little bit of a dip in that volume. Looking at 24-hour liquidations, however, liquidations are still very high, sitting at a total of 154 million. This is actually up 3.6% in the last 24 hours. If we do take a look at the last few days of price action, we can see we are more or less chopping sideways along a nice consolidation range at this uptrending diagonal support level. The big question is, are we going to see a breakdown and correction, or will we see this level act as support and result in a continuation up to that 46 to 48k range? That is something we'll be discussing in today's video. Moving over to that liquidation data, we can see of the total 150 million, 2/3 of those liquidations have come from long positions, and short positions came in at 57 million. Moving over to our volatility index, we can take a look over here and see on that 30 and 60-day period, starting on the 30-day period, volatility is starting to plateau, and on the 60-day period, we can see on the volatility index, we are starting to move sideways a little bit more. Again, overall, the volatility index is still moving upwards. We have an overall upward trajectory in the volatility index since around September, so that is obviously a good sign. Moving over to the DXY. The DXY has found support at that horizontal base of support, reflected by the 103 level. You can see that green zone we have marked out. Support is support until it is not, and we are showing signs of absorption and potentially reversals developing. If we do see a reversal develop, it is not going to be too much of a big issue. It is only an issue if we break above this diagonal downtrending resistance. This is when the trend flips from a downtrend to a uptrend. If we do break upwards over here, that could result in the traditional market seeing a bit of a pullback. That could result in Bitcoin seeing a little bit of a pullback. Of course, this will be overall bearish as the US dollar does gain strength against other currency pairs. Moving over, if we do see a loss of this lower level, that again is going to result in a correction down to the 101.5 to 100 zone. This, of course, is going to be very bullish and will likely result in continuations for our asset classes. Moving over to the S&P 500, we can see we had an excellent weekly candle close above that downward diagonal trend line. This downward diagonal trend line has been in place since the all-time high back in 2021, retesting and validating the trend back in July 2023, and of course breaking out in the last 7 days. We do expect the trend now to continue upwards to at least retest that all-time high at around 4,800. Of course, breaking over 4,800 does send the price action in price discovery, and we could definitely go much, much higher. While we are above this downtrending diagonal trend line, we are in an overall uptrend. The markets are looking strong. The markets are looking bullish. If we do lose this trend line again, say we come back under, that is when we're going to be starting to look relatively weak on the short term once more. The same applies for the Dow Jones over here, as breaking over that respective high time frame diagonal resistance, pushing upwards to retest that weekly all-time high close, and of course moving up to that wick high within this area of resistance. A break above this wick high at around 36,850 will result in a macro continuation upwards, and while the price action remains above this downtrending diagonal trend line, we are in an overall uptrend, once again looking very bullish. If we were going to see any sort of pullback, any sort of correction, the area of which that would develop from would be the area between the all-time high wick and the weekly high, represented by these two solid lines, as this area is an area of resistance. Let's go ahead and jump over to Bitcoin, as we have so much to talk about. We're going to be talking about the macro charts from a structural, a technical perspective, going over the super trend, the Ichimoku cloud, the Gaussian channel, the Bolinger bands, the market cipher A. We're going to be discussing the 4-year cycle. We're going to be talking about the short-term price action, the next move, and so much more. So before we get into that, guys, a quick word from Bitget and BingX, and we'll jump right in. I wanted to briefly interrupt today's video to discuss the two exchanges we use on this channel, Bitget and BingX. So which exchange should you sign up to? If you look to the right hand side of the screen, you're going to see the list of differences in relation to KYC requirements and the countries these exchanges offer services to. The first link down below being the Bitget link, and the second link down below being the BingX link. No matter which link you sign up to, you're going to get up to 15% discounts on your trading fees, up to $5,000 in trading rewards, and of course, you'll get access to every single MegaWhale exclusive bonus campaign we run on these exchanges. Alongside that, Bitget and BingX are incredibly similar. They are both ranked top 10 in terms of trading volume. They both have extensive liquidity pools and market pairs offering up to 125x leverage. And most importantly, they both offer protection funds for their users to protect you against any third-party hacks. So get started now and support the channel by clicking the links below. Thanks for listening. Okay guys, let's jump right into Bitcoin, and we want to discuss the 4-year cycle and macro charts first, as we are coming up on one of the most crucial moments for Bitcoin, the most crucial moment that we have seen for over 1,000 days, guys, over a year. And we'll be talking about this for a very, very long time on this channel. In fact, this is the indicator we've been discussing all the way back since the last bull run, and it's an indicator not a lot of people talk about, and is definitely gaining some popularity now in the cryptocurrency space as more and more people are finding out about it. This, of course, is the Ichimoku cloud baseline on the monthly chart. If we take a look at prior cycles, we can see a few things. We can see, according to prior cycles, the Ichimoku cloud baseline has acted as both a resistance and a trigger for the continuation and, should I say, initiation of the bull run. And what do I mean by that? If we take a look at this red line, we can see every single time we close a monthly candle above this red line on the monthly chart, we actually remain above that monthly candle, above that red line, until we create an all-time high. We had instance 1 over here. The second time we closed a monthly candle above it was over here in June 2020. We remained above the red line until we broke back below it, creating that low and of course creating that all-time high. If we look at the current price action, Bitcoin for the first time in over 1,000 days is actually challenging that Ichimoku cloud baseline once again. And in 22 days time, we are going to find out whether or not we have closed above it on the monthly chart, which will likely result in a copy of the prior cycles, meaning Bitcoin is likely to initiate a early bull run continuing upwards, or whether or not we are going to see a rejection and close underneath this level in 22 days, reflecting or representing something we saw back in 2019, which was a large wick above the baseline, a large wick above this horizontal solid line, which is reflected by 48K, only to result in a downtrend for the coming months until we finally broke back above it for a continuation upward. Now, if we overlay this chart on the 4-year cycle chart, we can see something very, very interesting. So we'll go ahead and quickly bring up this chart on the 4-year cycle chart. Ichimoku Cloud. If you want to bring this up yourself, bring up the Ichimoku Cloud, click settings, go ahead to style, turn everything off except the baseline. I like to change the baseline a little thicker so I can see it easier, and there you have it. So let's take a look. If we take a look at when we had the monthly candle closes above the Ichimoku Cloud baseline, we can notice every single time it happened within that bull run phase. So let's take a look. Exactly on that bull run phase, we saw a monthly candle above. This is on May 2016, the start of the bull run phase according to the 4-year cycle. We had the monthly candle close above the Ichimoku Cloud baseline. Fast forward to 2020, May 2020, exactly on the first month of the bull run phase according to the 4-year cycle, we had the monthly candle close. If we go forward, the next start of the bull run phase is April 2024. Therefore, if we do see future repeat itself, we will likely see a monthly candle close above the baseline of the Ichimoku Cloud on April 2024. What does that mean for the price action now? Because we are retesting it. It opens us up to 2 possibilities. Possibility number 1, we close a monthly candle above the baseline early and we initiate a early bull run. Number 2, we see a repeat of what we saw in 2019, which is a large liquidity grab above that respective dotted trend line. Remember, the dotted trend line is the dead cat bounce high from the base of support reflected by this lower horizontal level. Okay, when we lose a lower horizontal level, we capitulate to an all-time low. We can see it over here. So the baseline over here is going to be that base of support. So scenario number 2 is we see what we saw in 2020. A large liquidity grab over 48,000, only to close the monthly candle below the baseline, resulting in a short-term downtrend for the next few months before April 2024, which is when we close back above the baseline. Those are the 2 scenarios the baseline is suggesting. Let's move over into some other indicators. The super trend, a fantastic indicator we're going to be taking a look at on the 14-day chart. According to the 14-day chart, the super trend settings we do have is, of course, we have our ART, average true range at 9, about factor at 3 over here. We can see every single time, guys, the price action breaches the upper level of the red zone, we enter a green phase. Every time the price action breaches the lower level of the green zone, we enter a red phase. So it tells you overall market shifts and macro directions. What we can see in the past is every time we enter a green phase, we do not close a 14-day candle underneath the lower green range until only after we create an all-time high. What is this telling us? It is telling us we have a strong base of support developing at this green level, which currently is sitting around 30,000. This chart here is telling us it is highly unlikely we go underneath 30,800 according to the price range right now until we create a new all-time high. This is absolutely phenomenal news for the bulls, guys. So this chart over here is telling us we can expect an all-time high before we break back below 30,000. Again, it is signifying the 4-year cycle is playing out, the strength of the macro price action is developing, and everything is working out to plan. Let's move over to another chart, which is going to be our Gaussian channel chart on the 14-day chart. Once again, guys, if we look at the 14-day chart, we can see for the first time since 2016, the Gaussian channel has broken above the upper red band of the Gaussian channel after being within and underneath it. This is a significant shift in the strength and direction of the macro price action. it is telling us, according to historical data, we are unlikely to break back through the midline of the Gaussian channel until we create an all-time high. The midline of the Gaussian channel is sitting now at 29,700. Furthermore, supporting the claim that we're unlikely to see sub 30k. Moving over, we then have the Bolinger bands on the monthly chart, and once more signifying a fantastically bullish signal. And this is, of course, an indicator we have used in the prior cycles, and we have seen play out perfectly in the prior cycles. And this is every single time we close a monthly candle above the Bolinger band upper band over here, okay, and over here. Every single time we do that, that initiates a macro uptrend, which results in the price remaining above the Bolinger band midline, the orange line, until we create an all-time high. This chart is telling us in 22 days time, we may be closing a monthly candle above the Bolinger band upper band, and if we do, it would solidify the midline, the orange line, as a base of support. That is currently sitting at around 26.6k. Again, further emphasizing the fact that Bitcoin's strength is there on the macro chart. And finally, the last indicator we're going to be taking a look at is going to be the market cipher A on the monthly chart. And what have we seen? We have seen a blue triangle print. Now, what is a blue triangle? A blue triangle is simply the shift or crossover. And I deleted the indicator, the crossover between the 2-3 EMA, in this instance, the 15-17 EMA from the bottom side to the top side. Every single time we have seen a blue triangle print, we never, ever, ever close a monthly candle below the 50 EMA, which is going to be the red line, until only after we create an all-time high. We then see a red cross, which is the opposite shift between the 17 and 15, or 3 and 2 EMA, signifying the loss of macro strength. So what does this chart tells us? It tells us we are very unlikely to break below 26.6 or the 50 EMA until only after we create an all-time high. Now, why am I telling you all this? We are setting the scene for the macro chart. We are setting the scene for the next bull run. We are developing these levels on the higher time frame, these higher time frame levels of not only structural integrity and support, but of course, macro technical levels of support, and of course, more importantly, macro trigger levels. If we take a look at the prior 4-year cycle, according to our structural levels, we have 2 key levels of significance. We've got the dotted trend line and the horizontal base of support. The dotted trend line is reflected as the dead cat bounce high of the prior cycle. Every single time we close a monthly candle above that level, we technically enter a macro bull market, which results in the price continuing upwards, and we generally see the monthly candle close above the dotted trend line within that bull market territory. We saw that happen in, of course, October 2020, and we saw that once again happen all the way back in October 2016. In this instance, we are expecting that to occur only after April 2024, likely to develop within this bull run phase. So the bull run is not back. The main resistance between us entering a bull run and us being in a macro uptrend is going to be that 48k level. So let's dive over to this chart now. The 48k level is the major high time frame level of resistance, both on the technical chart, because remember, we have the baseline, okay, we have the Bolinger band upper band, we have all those technical levels of validation, but we also have the structural levels, which is reflected by, again, the dotted trend line on the monthly chart. We have this high time frame level of resistance. So the 48k level is the major roadblock. It is the major roadblock for Bitcoin, preventing Bitcoin from officially entering a macro bull market. Remember, we are in a macro uptrend between 32k to 48k. This is a macro uptrend. Now, when we break above 48k, we enter a bull run. That is when we enter the bull run. So we're shifting between macro uptrend into bull run. And the key level of resistance that facilitates that shift point is going to be 48,000, the major roadblock for Bitcoin. So the next big question is, are we reaching that? If we don't, what happens? If we correct, where could Bitcoin go? Let's go ahead and dive in. So it's very important to understand the macro uptrend is intact above 32K. So no matter what happens, provided we remain above 32,000, the 4-year cycle is going to be playing out as expected. Moving over to the 4-year cycle, it doesn't matter if we see a full-blown correction all the way down to retest the dollar trend line, the solid trend line, and then a bounce back up. Technically, the 4-year cycle will be in play. Technically, structural and technical validations would still be in play. This really wouldn't throw a spanner in the works in any regard other than your portfolio, of course, okay? The only issue becomes if we end up closing a monthly candle under 32K. If we close a monthly candle under 32K, that would signify we are seeing something we've never seen before, and that could destroy the 4-year cycle, resulting in a macro continuation down for Bitcoin. So I've identified that. We need to remain above 32K. Now, if we want to test 48K immediately, we need to remain above 38 to 40,000. 38 to 40,000 is the trigger point. If we think about this like a high time frame range, resistance support, this is almost like the midline. And we know that when we're trading parallel ranges, when we're above the midline, we're in this overall bullish territory. When we're below the midline, we're in this bearish territory. So if we do drop below 38K, that could facilitate a higher time frame correction back to 32,000. Provided we remain above 40,000, the overall target is still sitting at 48. Let's go ahead and jump into the short-term price action, guys. And you have to forgive me, my voice is not feeling the best today. So if we look at the 4-year, the short-term price action, we can see this is going to be the last 10 or so days of price action. This trend line started on the 1st of December. My bad. It started, when did it start? It started, the 1st of December, 2023, and we are now on the 10th of December, so about a 10-day trend line reflected by this overall trajectory, this uptrend. This uptrend initiated, it developed from the breakout of that major 38 to $40,000 resistance. So this is 38, okay, 38 and 40, zooming back to this chart, 38 to 40, this red box over here. So we broke above that level and we developed a 10-day long uptrend. Now the uptrend is reflected by this diagonal trend line, and a uptrend is a uptrend until it is not. You have to remember, guys, you have to trade with the trend in the market. If you're trading against the trend, keep your risks tight, keep your stop losses tight, and make sure you have proper invalidations, as the probabilities are no longer in your favor if you're looking for trend reversals at points of lower liquidity or where the reversals are unlikely to develop from. Reversals are highly likely to develop from resistance zones, from area of liquidity on high time frame charts. This is not one of them. So we do expect this uptrend to actually remain a support and the price action to continue upwards while we remain above this diagonal trend line. The moment we lose and close an hourly below this diagonal trend line, the probabilities then shift in favor of a correction. Where could a correction take us? We are looking at this gap in the VRPV. We're looking for we're looking for $42,000 as a primary target. If we lose $42,000, we are then looking for a retest of $40,000, which is going to be that $40,000 to $38,000 high time frame level of support. On the short term, I would expect a continuation upwards, provided this level does remain as support. If we lose it, I would then expect a correction. Talking about the upward move is likely to take us to the next level of resistance, which is $48,000 to $46,000. I'm going to leave the video there, guys. Thank you for watching. I hope you have a fantastic day. We'll catch you in the next one. Cheers.